All right. Good afternoon, everyone. Hope you guys are doing well. It's Tuesday, Wednesday evening. Tomorrow we have jobless claims, initial jobless claims data. Tomorrow, that's going to be some key data. If you remember, just a few, just last Friday when the non-farm payroll came out with a big surprise, we did dip, but I mean, we eventually recovered. But anyway, what you're seeing on your screen here is the S&P 500 cycle composite for 2023. This is really interesting data. How generally speaking, the S&P 5 takes a hot start in the first month of the year and then cools off in February before launching out in March. So we'll see how this month ends. We are still very early into February. Now, keep in mind, we do have CPI coming up next week, so the market could be looking toward that. If you are looking at the daily SPY, I will be super bearish if we come back into this wedge here. So we should, I think, with the daily stochastics and CCI turning down here, so is the MACD. I do think we're going to see lower, possibly retest at some point 400 level, 402, or visit or retest this wedge here before another breakout, or we can consolidate for a while. Remember, this is a historically over the last 12 months or so, this has been a very choppy area for the SPY. Not just the 380 level, not just this level here, but the 415 to 410 level right here. We've been kind of bouncing around in for the last 4 or 5 days, and you can see this is a level back here, back in August. Okay, during the run up in August, we had a chop area here before it went eventually higher, just a little bit higher at 430 and fell off a cliff. Same thing back over here in this area here back in April 2022. It chopped around here. Here's another chop area that we were in for a period of 8 trading days or 9 trading days in May of 2022, waiting for that CPI data, and it came out and dropped. Okay. So we're kind of just like hanging out there. And this is the bottom. Where we are now is the lows of March 2022. So what you can see or gather is the market is trying to determine the direction, whether we're going to hold this area as support where it used to be resistance, or are we going to reject it and go lower once again? So we'll have to tune into the jobless claims data tomorrow and for the rest of the week. If you look at the weekly chart here so far, we got an inside week with the gravestone doji setting up here a little bit lower. If we close under, let's say, 408, 407, then it becomes a shooting star on the weekly with lower volume, although there is 2 days left in the week here. If we go to the Qs, all right, the Qs, same thing. All right, you so far ending Wednesday on the weekly with a gravestone doji inside week again, and of course the daily chart here. If you look back on the Qs, this is the an area right here back in June where we did finally take another new low from this 305 310 area. So we're just kind of chopping around here, and so you can tell, if we just kind of start zooming left and right, this is a key level here for the Qs, whether we hold it as support, all right, eventually making new highs, or we're going to reject this area as a resistance. All right, heading into tomorrow. Now, over the last couple of days, you can see that the SPYs and the Qs held very well in certain levels. So, number one, the Qs on a 1 hour chart, if you're part of TRT, this is the exact chart we've been trading and going for the breakouts, going for the breakdowns, throughout the last several weeks here. You can see that the Qs obviously are still an upward channel. You had a bullish pennant breakdown eventually because of how we launched out of it, almost hit that 313 mark to go bullish, but it just rejected this area here, which is the upper trend line here, and broke down. It held 303 just like it did Monday and Tuesday of this week. All right, so we're right back at that level. But now it kind of looks like a bear flag on the hourly going into tomorrow. So we'll see what the data looks like. Of course, we could just continue to chop around these levels, right? There is pretty good hourly demand at 303, 304. If that breaks, watch out below. You have a ton of volume gaps. And that's why the bulls are hanging to this 303 so tight, because if it loses it, then the bear starts stepping in and taking it down to possibly retest 300 levels. The bottom of this channel would be literally 300 or 301. But if we break 295, this is the key area here. If we break 295, then we effectively break this upward trend. So we'll see what happens tomorrow. Same thing with the SPYs. If you're looking at SPYs, nice upward channel for most of January, okay, with very nice trend bounces. So what you're looking for is yesterday we took it down to 407. If we come back, if we actually come down here, there is strong support at 406, 407 area. That's going to determine where we're going to go over the next week or so. And you know, with CPI coming up next week, there could be a different story. However, once again, we held 410 today, good supply or demand area, but look at all this hourly gap, all right, volume gap. That's got to eventually, I mean, once it flushes down, it could be quite a drop to 407. So that's kind of my target going into tomorrow and Friday, is to see if this 407 is actually going to hold. I do see us kind of bouncing around 407 if we do drop tomorrow on data point. Now, we do have a bullish pennant as well on the hourly, okay? Very extended though. You can see we're made a lower high, but it's kind of broke out yesterday, rejected. This is a failed breakout pretty much, and we're right back down, retesting this trend line. So you got a 412 resistance going into tomorrow. If it breaks through, then yeah, maybe a dead cat to 413, all right? But if we cannot break 412 overnight or tomorrow on data, then I do think it's going to reject here and move, retest 410, 409. The lows of today was like right under 410. So it briefly broke the 410 before it bounced back. All right. So with that being said, that's a lot of information to digest. I'll see you guys in the morning.